What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Monday, April 29th. Alright guys, Palantir stock to end out the week here finished up 81 cents per share on Friday, plus 3.73%. Now it is up a few cents in the after hours. As always, volume in the after hours is going to be very, very low, so take it with a grain of salt, but of course it's the real price, so I prefer it's in my favor after hours rather than flat or the opposite way. But listen, let's take a look here, starting with getting out as much bias as we can with a quick little volume profile analysis on the 5-minute chart. So what we're going to do here, guys, we're going to go through a variety of time frames, and then we're going to pull out all the options data, including the directional bias and the expected move. So listen, if you're new here, please subscribe to the channel. My goal is 7,000 here in the next week or so, and I cover Palantir all the time. Most of the time, it's every day. So let's take a look here, guys. Now, in terms of moves, really what I want to look at is this move off the open, but I'm not going to circle anything. Typically, I'll circle the most obvious moves. I just want to look at the whole day and see if there's anything out of context here, and we'll just knock out this profile analysis nice and quick. So you see here, we have a very contextual opening bar, okay, comparable to what we got on Thursday there. Now, normally we see a really quick fade in volume. If we were to take out this bar here, that's exactly what we would have had. However, that one kind of threw things off a little bit as we pushed higher and higher off the open. A pretty sizable candle there. But, really when you average this all out, it's a pretty contextual open with a small amount of additional bullish bias right off the open. Okay, it's not tremendous though. A tremendous amount of bullish bias would be all four of these opening bars, stayed at 1.2, 1.3, 1.4 million, rather than seeing really that contextual fade bar per bar off the open, with just kind of this one outlier as we made a push higher. Okay, so small bias, but it is to the bullish side there off the open. Now, again, we see this little pop in red volume once we hit the high of the day, but we also had a pop in that green volume on the actual bar of high of the intraday high. So this to me is a little bit of a wash. This here, too high of a chance of fooled by randomness. I don't like just one outlying bar by itself. And as we come into the close here, again, we very much so expect this ramp up into the close. Usually what the volume ends up looking like is kind of a U, like a teacup, with the right side, the close, being between 1/3 and 2/3 the size of the open. Okay, so that's pretty much what we got here today. You got that contextual ramp into the close. Okay, now this bar after the bell, this one is typically, like for example, guys, when we look at NVIDIA, for example, this first 5-minute bar after the closing bell is oftentimes one of the highest bars of the day. But it very often, or very rarely, I should say, leads to tremendous movement in the stock. And the reason that is because it's a battle bar, because it's usually an algorithmically driven rebalancing bar. It's funds and institutions, really. Their algorithms at the end of each day trigger, and in the after hours, they do their rebalancing for the day, buying and selling, which is why it ends up being a high volume battle bar with very little movement. You just have a lot of both sides happening at the same time to make their portfolio look the way they need to or want to for their clients for the day. It really is that simple on a lot of these individual names. All right, now let's take a look here at the psychological self-fulfilling prophecy levels, starting with our very simple 30-minute chart. Now you can see here, guys, that on Thursday, we just barely reclaimed that 50 period. And what's really interesting is, you guys hear me talk about all the time, what's like the best case scenario to see on ideally as many time frames as possible, but let's just talk about the 30-minute here for a second. What's the best case scenario to see if you're a bull? Well, really what you want to see is this setup with the 200 period in an ascending position as aggressive as possible, the 50 period in an ascending position, ideally as aggressive as possible without being parabolic to the point where it's unsustainable. The stock price, of course, above it, and treating the 50 period as an ascending support level, where each time you test it, you clean bounce on high volume. That's best case scenario. Okay, now the 30-minute changes quickly. All right, so, but really, ideally, in a perfect world, you would see that on the daily, the 4-hour, you'd see it on the 1-hour, the 30-minute. But just specific to the 30-minute here, we held that today, Friday. or at least depending when you're watching this. Of course, this is relevant through till Monday. However, since the reclaim back on Thursday, guys, we really haven't seen a hard retest of the 50 period. So come Monday, bulls, if we see a retest of the 50 period, I expect this is going to continue higher. Not necessarily the stock, the moving average is what I'm talking about, right? That'll continue higher likely into Monday. And if we end up seeing a retest of that 50 period out of the stock, I don't care what volume it tests on since we're already above it. No break is required, but I would want to see a high volume push upside to show respect as a support level. Bears, really simple for you guys. If you guys can get back below the 50 period, breaking on high volume, retesting on low volume, and then breaking downside again, rejecting off high volume, that shows a nice break and hold, right? Break with confirmation of new resistance. Now, the 4-hour chart, let's take a look. You can see here in the last couple of days, we were struggling for a little while, right? To reclaim that 50 period, that was really a struggle. Look, rejection, really, an overnight reclaim, which you have to take with a grain of salt, rejection. And as we move in, we've just had trouble with this 50 period on the 4-hour here on Palantir. But on Thursday, we reclaimed it, and we're now sitting pretty much in between this channel, between the 50 and the 200. Now, with a scenario like this, guys, for me, it's not like, well, I really need to see a retest of the 50 period because we're already halfway to the 200 period. Let's ignore 23 for now. We'll talk about that in a second here on the daily. But listen, bulls, I really wouldn't be too mad since we've struggled so much with the 50 period at just a quick upside test of the 200 period, high volume break, low volume retest, high volume bounce. Okay, understand, as far as the after hours price, that 200 period is currently about 3.75% away. So that would be a sizable move. But on Friday, I mean, we're talking plus 3.73%. So it's nothing we haven't seen before out of Palantir. And again, bulls, if we do see a downside test of the 50 period, obviously just want to see a high volume bounce, holding that as support. Bears, if we see an upside test of the 200 period, it's already 3-4% against you, but you want to see that act as resistance. And bears, your goal, ideally, would be a high volume downside break through the 50, retest, and high volume rejection. Okay, pretty simple here. Very similar to the 30-minute, with a couple of key differences. Now the daily. Guys, the daily is very important. In a second, we're going to talk about something that's earnings related. That's not coming up, though, however, until May 6th. So we're not going to have to worry about that this coming week. That'll make sense when we talk about expected move. But you see where we are on the daily, guys? The daily is very much so in play on Palantir right now. Not only are we currently in this channel from 2130 to 23, we also have that 50-day moving average, which, believe me, has all the eyeballs in the world. Right around 2350. On the 4-hour, the 200 period moving average is right around 2345, 2350. Okay. So, listen, there is some potential points of psychological resistance to get up to 24. So, bulls, a couple of things to consider here. The 4-hour, of course, but talking about the daily specifically, 23 has been the top end of this little channel that we've had drawn. I've had that drawn for quite a while now on Palantir. A break and hold above 23 is great, not for 3 minutes, right? Stay contextual, right? Ideally, as much time above that level as possible to allow more and more volume to pour into the stock to agree with a break and hold above 23, right? But just doing that isn't quite enough on Palantir, is it? Because now we have the 50-day moving average, which everyone who's looking at Palantir has pulled up on their screen probably at all times, even funds, institutions, everybody. Then we have the 50-day to worry about. So, like, best case scenario for Palantir, if you're a bull come Monday, at least best scenario is $1,000 a share, right? But best realistic scenario, I mean, you're talking about a big day. You're talking about 4.5%, 5%, 6% now. But ideally getting above 23, the 200 period on the 4-hour, and the 50-day on the daily, right? The 50-day moving average, and holding above that as soon as we possibly can, that puts Palantir through a lot of the near-term muck. Okay, that would be a really, really great day. If I'm a Palantir bull, I don't care that it's not up 25%. As long as we cross those three things, you know, that's a good weekday. Now, listen, bears, ideally, if we test 23, since that's the nearest level, You guys want to reject as hard as possible off 23, set yourselves up for a downside test of 2130, because ideally the best scenario for you guys is getting back below 2130 outside of this 2130 to 23 channel as soon as possible, of course, to the downside. All right, now compared to the last couple months, implied volatility is still sitting in the higher end of that channel. It's not the highest it's been, but it is a little bit higher. Okay, so those of you looking to purchase options right now, facing perhaps a slightly elevated risk of IV crush, but that's of course up to you and your risk profile. Now, the expected move, this is what we were talking about when I'm talking about earnings, okay? So if we look here, guys, the expected move, it is a technical term, right? The next expiration that we have on Palantir is going to be May 3rd. Okay, that's next Friday. By next Friday, what the market expects in terms of volatility, okay, this is the volatility expectation, is plus or minus $1.21 per share compared to today's closing price. That's next Friday's expectation. How does that help us for Monday, right? This is a Monday video. Well, this is where we do a little bit of surgery, right? A little bit of guesswork. So if we take that number, that $1 and plus or minus $1.21 a share, and we divide that by 5 trading days, okay? There's not, now I understand Friday we're likely to see some additional movement due to earnings coming the following week. But we can only do what we can do here, right? So we divide that by 5 trading days because it's not like earnings are on Tuesday where we expect some ridiculous outsized move on one specific day. That gives us about 24 cents a share plus or minus of movement, come Monday. And the reason I can't necessarily say every single day is because that expected move changes each day. Okay, with the market's new information, with their new sample size, with their new opinion. And that's from all the traders, by the way. That's how that's priced. So currently, we're getting about an expectation of 24 cents plus or minus, but we have to add back 50%. I like to add 50%. That's not a rule. That's what I like to add back currently in this market to make up for the fact that if you consider the math that we just did previously, that gave us 24 cents of expected movement on Monday plus or minus. Well, that assumes 5 green days in a row or 5 red days in a row, right? We can't overlook that. We have to remember that's what that assumes. So in this market, I like to add back 50%. All right. I don't know when that'll change. Could be a while. Could be soon that I'll change that. Right now, I'm adding 50% back. That's plus or minus 36 cents approximately of movement. Now understand, guys, that is just the one standard deviation expected move with a little bit of guesswork to give us a slightly more accurate idea, at least in my opinion. That's how I'm doing it right now. But you have to understand, like, that's like the line, right? That's like the line on the game, for example. I hesitate to make that comparison always because it could not be more different trading and just gambling. I guess you have people who do it for fun, and then you have people maybe less, even less in the gambling world. You have the so-called sharps, right, who actually make money long term. But in no way, right, is the expected move meant to be exact every day. It's the opinion of the market. And the market can be wrong. That's the beauty of the market. If the market was always correct, there wouldn't be any room to make any money. Because, you know, wherever Tesla's going to be in the next 5 years, it would probably be priced there already. You want the market to not be correct, you know, for a long time out in the future. The market's forward-looking. But it's all psychology in the very short term. Mid and long term, the fundamentals always take over. Okay? But the beauty of the short term, which is why I really love to keep these videos for the next trading day, is that it's all psychology and there's so much opportunity because the market gives you an opinion. And if you have a strong bias that disagrees with that opinion, there's an opportunity to make money. So 36 cents of movement is the market's expectation from the difference between Monday's close and Friday's close. And if you think, you know, well, if you're looking at this and you're like, okay, well, the next 5 days, what's the market's opinion? The next 3 days, Monday, right? And you're like, I think that we're not going to see that at all. Okay, well then maybe, and if you don't have much of a directional bias on top of that, maybe you're looking for a more neutral Like volatility farming kind of strategy, right? Like a Vega farming strategy. Goes by a million different names, right? The Theta Gang. I think that's like the new age term that those the people on Reddit call it. But the truth is that would be something like there's a million different options, right? There's a lot of creative options, but a really simple one would be like an Iron Condor. Okay. And if you're somebody who's like 36 cents, man, the market's wrong. I think this thing's going to move 70 cents or $1 on Monday or Tuesday or whatever, whenever you're looking at this. Well, if you have that opinion along with a strong directional bias, right? Well, then the options that you can purchase, right? The contracts, you could purchase them at a discount compared to what they would be trading at if you end up being correct in your opinion. Okay, because, you would likely see a little bit of volatility pump get added back because the market underpriced the expected move. So you really, the expected move is meant to set a baseline, and then you look at it and say, okay, I think the market's right, or I think the market's wrong, and here's why. And then that sets you up to make money. Okay, in no way is the expected move supposed to be like, okay, well, I bought a bunch of puts, and now I'm insecure about my position over the weekend, so let me just check the expected move and see if it would be big enough for me to make money if it goes down. Okay, it's not really like that. It's the market's opinion on volatility expectation, and then you look at that and then you make your decision. Okay, do I agree with that or disagree with that? Okay, now by design, the expected move it does not have a directional bias, but what we can do is we can look at the options directional bias, which is a separate kind of deal here by looking at the volume. So here on Friday, we had 380,000 contracts traded on Palantir. 243,000 of those were calls, and 137,000 were puts. So we're seeing a call side bias here on Palantir from Friday. And if we take a look, though, if we break this down by time frame, this gets interesting now. The 0 to 20 delta range, these are the short-term speculators. They actually flip just a little bit. It's not as equally overwhelming as the call side bias on the overall. But look at this. You have just under 60,000 calls in that short-term speculator category and just under 65,000 puts. So you see that just barely flip when you're only talking about the short-term speculators, which is another factor to consider here. But again, worth knowing, it's certainly not overwhelming by any means. Listen, guys, if you get value out of these videos, one thing I ask, takes half a second and it's free. Before you head out, just hit the like button. Helps out tremendously. And hey, if you think someone who might like Palantir stock would benefit by hitting the like button, it maybe helps another couple people see it. So listen, I appreciate it greatly. Hope you guys have a great weekend here, or a great Sunday night, Monday morning, whenever you're watching this, and I'll see you in the next one.